Hey fellow stock guardians, happy Thursday, August 12th, 2021. I'm Hoda, a stock card CEO, reporting to you from a green day in the stock market. I looked at the reasons for overall optimism in the market. I also dug into two defense stocks, the newcomer Palantir Technologies and the oldtimer Kratos Defense Security. Lastly, I'll discuss some interesting defense-oriented ETFs inspired by those two stocks. Let's get started. The market indices ended the day in the green. The S&P 500 and Dow Jones indices once again set record highs by the close. The $1 trillion infrastructure bill and optimistic inflation indicators from yesterday's consumer price index kept investors more confident in the future. Also, the new weekly jobless claims report came out today, down to 375,000 new claims, lower by 12,000 compared to last week. Overall, the market had an optimistic outlook and the indices reflect that. Before we get to today's two defense stocks and ETFs analysis, let me thank you for being a stock guardian. My team and I appreciate you watching, listening to, and reading the Daily Roll episodes. And more importantly, we thank you for using a stock card platform in your research. Thank you for being a stock guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to the show, and then create a free account on stockcard.io. Thank you for becoming a new stock guardian. Our first defense stock of the day is Palantir Technologies, ticker PLTR. The company popped up on today's winning list of stocks. This technology company is focused on helping large operations manage their data efficiently for better decision making. Palantir has a history of winning government contracts, like this May, when the US Air Force awarded them a $32 million contract to provide strategizing software in critical missions. Its biggest deal ever was in December 2019 when Palantir was picked for an Army contract. The Army recently opted for the second year in this ongoing contract that could total over $800 million in value. By the end of 2020, about 50% of Palantir's revenue was coming from government contracts, giving us enough reasons to group it as a defense stock. Today's earnings report pushed the stock up over 11% after investors were happy to see a 49% growth in revenue. Judging by stock card, Palantir won't have problems with cash anytime soon, and it has some great sales growth as we just discussed. Speaking of defense contracts, reminded me that I saw Kratos Defense Security Solutions, ticker KTOS, on the stock card's earnings calendar last week. The company released its quarterly earnings on the 3rd, which showed a 20% growth in revenue year over year. It predicted equal, if not slightly lower revenue for the coming quarter, citing an international training contract that it's lost as the primary reason. This is likely why the stock dropped from $27 to under $24 and has yet to climb back since. Investors are expecting more hefty contracts like the one Kratos was paid $55 million for in February. For this contract, the company would provide hardware and systems for the government's unmanned drone, satellite, and defense operations. It's no wonder the company's stock card paints a great picture. Not only is it profitable with free cash flow, but management has also done a great job on returns for invested capital, which you can see under the Management Effectiveness tab. Kratos was founded in 1994 and has some long-standing ties with the government for contract works. They've been recognized as a dependable company, and I would have to agree. It also doesn't hurt that you can invest in the stock now at a reasonable price based on an average analyst price target of $28-ish per share from the estimated first share price section on its stock card. In a way, Kratos Defense is the opposite of Palantir Technology. One is a newcomer that is hard to trust, and the other is an old-timer that keeps winning from my point of view. Kratos is a top 25 holding on the iShares US Aerospace and Defense ETF, ticker ITA, that you can find by searching ITA in the search bar in StockCard. It's also a top 25 holding of ARK Autonomous Technology and Robotics ETF, ticker ARKQ. Comparing ARKQ with ITA, ARK's ETF has a better fee and cost structure and has outperformed the S&P, and it's undervalued at the current price. At the same time, the ITA is reasonably priced with a lackluster performance track record compared to the S&P 500. Between Palantir, Kratos, ARKQ, ARK's Autonomous Technology and Robotics ETF, and ITA, iShare US Aerospace and Defense ETF, I would rather invest in ARK's ARKQ to get some exposure to defense stocks instead and still get a well-priced and well-performing investment. ARKQ wins my vote today as a defense-oriented ETF, although I know it's not exactly a defense ETF. Folks, I've told you in the last couple of days, and I'm going to repeat it again. Last week, we rolled out a significant new update to StockCard. We greatly improved our ETF cards. Yesterday, I uploaded a quick rundown to show you how to research ETFs using the ARK Innovation ETF, ARKK example. The StockCard team and I are super excited to let you guys get your hands on this tool. ETF cards have been one of the most requested features that you have asked for in the last 12 months, and your wish is our command. For more in-depth explanation, I'd like to invite you to check out the demo video. I'll leave a link in the show notes so that you can check it out. That's it for today. If you haven't already done so, please give StockCard a try, research as many stocks and ETFs as you want, and consider following a few successful portfolios and investors by visiting the StockPicks page on the StockCard platform. The number of new portfolio publishers and investors joining our community is growing by day rapidly. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. Like, subscribe, and share these market recap reports with your fellow investors. Come back tomorrow for another market recap report. See you then.